You have questions about the USDA loan and I've got answers. In this video, I'm going to answer all the frequently asked questions that I get about USDA loans. After watching this video, you're going to have a very good understanding of what this loan is about and different scenarios that can happen. Let's get into it. First off, we'll go with an easy one. What is a USDA loan and how does it work? A USDA loan is a government-backed mortgage. It's designed to help low to moderate income borrowers buy homes in eligible areas with a zero down payment. There are two types: the guaranteed loan, which is issued by lenders backed by the USDA. Then there's the direct loan, which is issued directly by USDA Rural Development for low to very low income borrowers. Both programs have income limits based on your area and household size and require that the home be used as a primary residence in an eligible area. Does USDA funding run out and when should I apply? USDA direct loans funding comes from the government's budget, which follows the fiscal year, which is October 1st to September 30th every year. Funds are limited and can run out, meaning applicants may be waitlisted if funds are exhausted. The guaranteed loans are less likely to run out of funding because they're backed by the government but issued by private lenders. However, there can be delays if there's a government shutdown. The USDA direct loan is more known for running out of funds. A state can run out of its allotted funds, then they can ask for more money from the government, but they have to wait to get approved. There can be a wait list to get funded. So if you're applying for a direct loan, I don't think there's a perfect time to apply. It's best to apply as soon as possible so you can get in the queue. Another thing you have to realize is when you're on this wait list, it's not like it's first come, first serve. There are certain scenarios where people who are in greater need will go above other people. For instance, if someone is in a situation where they have very low income and a bad living environment or unsafe, those are going to get priority. As soon as you figure out you want a USDA direct loan, apply as soon as possible. I've heard of some people applying and closing on a home within 6 months. I've also heard of people who've been on the wait list for 3 years and still haven't gone through the approval process. It depends on the state that you live in and the available funds. If you're curious about what the wait time is for your area, you can call your local USDA Rural Development office and they can tell you. What type of homes qualify for USDA loans? Single-family homes, modular homes, condos, and certain manufactured or mobile homes, townhomes, and one-unit duplexes. Condos, townhomes, and duplexes are a little less common in rural areas. Another note, when we're saying duplexes, you would only be buying one half of the duplex. You wouldn't be buying both units within the duplex. Then the home must meet the HUD guidelines, meaning they must be safe, modest, and structurally sound. Manufactured homes must be brand new unless they qualify under the Manufactured Housing Pilot Program. By the time you're watching this video, it may or may not be a thing, but here's a brief rundown. It allows financing of existing manufactured homes built after January 1st, 2006, as long as they're on a permanent foundation and meet inspection requirements. Again, this is a pilot program. Things might have changed, so reach out to a lender to find out what the current rules are. There isn't a maximum amount of square footage that a home can have. There's an old USDA direct guideline that said 2,000 square feet. That's not the case anymore. The minimum square feet a mobile home can be is 400 square feet. A tiny home that is under 400 square feet, they're technically eligible if they're built on a permanent foundation and they meet the local building codes. However, lenders may consider tiny homes too risky of an investment. Barn dominiums and converted barns are usually not eligible unless they meet local housing codes, HUD standards, and the USDA's modest housing requirements. Homes need to be stick-built unless they're mobile or modular homes. There isn't a specific land size requirement that the USDA lists. However, I've heard unofficially that people have been told anywhere between 2 and 5 acres is the limit. Just work closely with your loan officer so they can help guide you on those requirements. Typically, the home and the land that it's on have to be similar to the rest of the area. So if homes are on less than an acre and you find a home that's on 10 acres, that could be an issue. If I own land, can I use a USDA loan to build a house? Yes, but there are strict requirements. The land must be in an eligible area. I have a link in the description for USDA resources, one of those being an eligibility map. Not all lenders offer USDA new construction loans. If the land is in a flood zone, lacks water access, or has environmental concerns, it might be ineligible. The land also has to be modest and not income producing, so a 10-acre farm probably wouldn't qualify. Can I use a USDA loan for an investment property or rental? No, USDA loans are for primary residence only. The home must be owner-occupied and it can't be used as a rental property or an investment home. Can I rent out part of my home if I have a USDA loan? No, you can't rent out part of your home or do house hacking. The home can have another detached living space like an accessory dwelling unit or ADU, like a mother-in-law suite that meets USDA guidelines. The ADU can't have separate utilities or be set up as a separate rental unit. Ultimately, when the appraiser comes to appraise the home, in their report, they'll decide if the home is considered to be a rental unit or not. If you'd like a USDA Quick Start Guide, you can find it on my website, workwithdang.com. There's also information there on how I can help you find a real estate agent in your area. What if the home that I want to buy has a well or private water source? Does it need to be tested? Yes, a quality test is required to ensure it meets state, local, or EPA drinking water standards. If the home is connected to public water, no additional testing is required. If the property has an extra well that's only used for watering the lawn or things like that, the well doesn't need to be inspected. What happens if I get a raise after being approved? Will I lose my loan? Before closing, if your income goes above the USDA limit, you may become ineligible for the loan. Speak with your loan officer to let them know what happened and they can help guide you through that. After closing, your income is not monitored unless you have a direct loan. For direct loans, annual income must be verified every year to determine if you're eligible for interest subsidies. But if you end up getting a big raise or hitting the lottery or something like that, they're not going to take your home from you. However, if you have a subsidy on your interest rate, that could change if your income raises. Does per diem count as income for USDA loans? If the per diem is taxable, it must be included in annual income. If it's not taxable, it's considered reimbursement and not counted as income. And just in case you're not familiar, per diem is an allowance paid to an employee to cover expenses like meals, travel, parking, living expenses, etc. If a household member is unemployed, does their income count? If an adult household member is unemployed but actively looking for work, their previous income must be included in household income. However, it may not count for repayment income since they're not currently working. If there's proof that they're not seeking employment like a resignation or an official termination letter, their income does not need to be included. If I'm separated but not officially divorced, does my spouse's income count? Yes, unless you've been living apart for at least 3 months for reasons other than work or military service, or you filed for divorce or legal separation and can provide documentation like a separate lease, utility bills, and bank statements showing different addresses. Do I need 2 years of work history with the same employer to qualify? No, USDA does not require 2 years with the same employer, but you must have at least 1 full year of stable, dependable income. Changing jobs is okay if your income is stable and predictable. Short-term gaps like medical leave, maternity leave, and relocation are allowed with documentation. Can self-employed borrowers qualify for a USDA loan? Yes, but self-employed applicants must show 2 years of documented self-employment income. They may want to see a profit and loss statement and possibly a balance sheet for the current year. They'll also be required to show proof that their business is still operational, like a business license, website, or bank statement. What if I recently became self-employed after being a W-2 employee? If you become self-employed after being a W-2 employee for a long time, you may or may not be qualified. If you have a strong work history in the same field and your business is stable and predictable, maybe that could work. If you recently transitioned to a contract job with the same company, that might work as well. If you just started self-employment in a new industry, it may be harder to qualify. Just a note here, this video is for edutainment purposes only. I love to give you as much information as I have, but everyone's situation is different and each underwriter can interpret your situation differently. Use this video to help understand this loan better, but talk to a lender to find out if the USDA loan is a good fit for you. What credit score do I need for a USDA loan? There's no official minimum credit score, but most lenders will require a 640 or more to qualify. Some lenders may approve lower scores and some may not. If you're getting the guaranteed loan, which is the loan that you get from any USDA-approved lender, they have something called overlays. Although the USDA may not require you to have a certain credit score, that particular lender might. That's why it's always a good idea to reach out to multiple lenders to find out the best fit for you. Also, an important note here, when you're looking at your credit score, the credit score that the lender is going to be looking at is your FICO credit score, which can be a different score than what you can find on Credit Karma and other websites like that. If you don't have a credit score, USDA does allow you to provide extra documentation to prove your credit worthiness. This could be a history of rental payments, car payments, things like that. But again, if you're doing the guaranteed loan, it's going to depend on the lender and what they accept. I've heard of some people getting approved and their credit score was in the 500s. Can I qualify for a USDA loan if I have collections on my credit card report? It depends. Medical collections are typically not counted against you. Non-medical collections such as unpaid utility bills, credit card debts, or auto loans may need to be paid off or require an explanation before approval. Federal debt like defaulted student loans or tax liens must be resolved before USDA approval. Can I get a USDA loan after bankruptcy? For Chapter 7 bankruptcy, you must be discharged for at least 3 years before applying. For Chapter 13 bankruptcy, you must have at least 12 months of consistent on-time payments in your repayment plan and obtain court approval to take on a mortgage. Also, in these situations, I do recommend reaching out to a lender because there are some moving parts in these scenarios and everyone's situation can be a little bit different. So talk to someone specifically about your situation. If I had a foreclosure in the past, can I still qualify for a USDA loan? Yes, but there is a waiting period of at least 3 years from the foreclosure date. You must also show good credit behavior since the foreclosure. Can I buy a home with the USDA loan and later convert it into a rental property? USDA loan requires you to live in the home as your primary residence. If you later move and want to rent out the property, you don't have to refinance, but you can't use a USDA loan to purchase another home. So yes, you can convert it into a rental if you need to move out of the home because it no longer fits your needs. What if I want to add an income-producing feature like a wedding venue or farm? So that's not allowed if the property is primarily for commercial use. There are some exceptions to the rule. Small-scale hobby farms may be okay if they're not the primary use of the home. If you have a garden and you sell some of the fruits of your labor at the local farmer's market as a little side gig, that might be okay. Now, if you have a small side business like an Etsy shop or you're freelancing, something like that, all that's fine. You just can't have any features on the home where it's very obvious that this is an income-producing property like a wedding venue or a big farm. Can I get a USDA loan if my spouse is undocumented? Yes, but only the citizen or legal resident spouse can apply. The undocumented spouse's income will count toward the household income eligibility for determining whether you qualify based on income limits. However, their income will not be used for the repayment income calculation since they can't be on the loan. Only the citizen or legal resident spouse would be able to be on the loan. What if I'm planning on getting married in a year? Can I apply for a USDA loan? My fiance doesn't live with me and we don't plan on moving in together until after we're married. Yes, you can apply now, but there are some things to consider. If you close on a home before getting married, your future spouse's income will not be counted toward eligibility or repayment if you don't currently live together and you don't plan on moving in together until you get married. If you happen to have a joint bank account, you may need to explain to the lender those bank deposits so it's not counted toward your income eligibility. However, if you get a USDA direct loan, your income is reviewed every year to determine if you qualify for payment assistance. After marriage, your spouse's income will count, and if you have a subsidized rate, that could get adjusted. Again, this is only for the USDA direct loan and not the guaranteed loan. Can I have a cosigner on my USDA loan? Cosigners are not allowed on the guaranteed loan. They would have to live in the home. There is a potential for a cosigner with a direct loan, but it's not very common. Can I apply for a USDA loan with a friend, sibling, or unmarried partner? Yes, co-applicants don't have to be married as long as all applicants intend to live in the home as their primary residence. Can the seller pay for my closing costs? Yes, sellers can contribute up to 6% of the loan amount toward closing costs. This can cover loan origination fee, title and escrow fees, and prepaid items like property tax and insurance. Can the seller pay for my real estate agent's commission? Yes, and this does not count towards the 6% limit. The seller can pay for both the buyer and seller agent commissions. How much are closing costs for the USDA loans? Closing costs typically range from 2 to 6% of the loan amount. This includes a loan origination fee, title and escrow fees, appraisal, prepaid property taxes, and owner insurance. Can closing costs be rolled into the loan? Yes, but only if the home appraises for more than the purchase price. For example, if you buy a home for $200,000, if the appraisal comes back at $205,000, you can roll up to $5,000 in closing costs into the loan. Can I get reimbursed at closing for money I've already spent? You might be able to, but only for certain expenses, including the earnest money deposit, home inspection fees, and appraisal fees. To be reimbursed, you must provide proof that you paid these costs like receipts or bank statements. If you put it on your credit card, you won't be able to get reimbursed. The reimbursement only applies to the direct loan, not the guaranteed. Does USDA allow temporary buydowns to lower high interest rates? Yes, the USDA loan allows temporary buydowns if they meet specific program requirements. First, let me explain this a little bit. A 2-1 buydown is when the seller, lender, or buyer covers part of the interest rate for the first 2 years of a loan, lowering your initial payments. After the buydown, your rate is adjusted to the original fixed rate for the remainder of the year. As a note, for the USDA loan, the buyer cannot pay for the buydown, only the seller or lender. Is homebuyer education required for USDA loans? For the guaranteed loan, it's not required. For the direct loan, it is required. Applicants must complete a homebuyer education course before closing. As of this recording, the cost of the class is usually around $75 online, and you can find cheaper ones or free ones if you go face-to-face. You'll want to talk to your loan processor about the specifics of that. If I get a USDA direct loan, do I have to repay the subsidy? Yes, the USDA direct loan subsidy for the payment assistance is a loan and not a grant. So with the direct loan, the government sets the interest rate each month, and it's typically less than what you would find on the general market. As of this recording, the interest rate is around 5%, and if you're getting a regular interest rate somewhere, it would be closer to 6.5% or 7%. However, for some people, even having that lower interest rate, it's still going to be difficult to pay the loan. The USDA Direct allows for people who qualify to get an interest rate as low as 1%, and this is where the subsidy comes in. When you sell the home or refinance, USDA may require repayment for all or part of the subsidy based on your home's appreciation and the length of time you've owned it. The amount owed depends on how much subsidy you have and your home's value at the time of sale or refinance. Can I pay off my USDA loan early? Yes, there are no prepayment penalties. Does owning an empty lot make me ineligible? No, owning land without a dwelling doesn't disqualify you from getting a USDA loan. Can you get down payment assistance with the USDA loan? The USDA loan doesn't offer down payment assistance directly. However, some state and local programs offer down payment assistance, and you can use that toward your closing costs. If you'd like some free resources like an affordability calculator or a free homebuyers course, check out my website, workwithdang.com. I can also help you find a realtor in your area. Thanks for watching.